I want to get to NVIDIA in a second, but we just had a really fascinating conversation, not unrelated, with Winston Ma, formerly of the CIC, about the fact that he thinks this is a sovereign wealth fund, the U.S. taking stakes in Intel and MP Materials and so forth. Do you agree?
Morning, Matt. Well, I think it's a bit more of a utility play than it is a sovereign wealth fund play. But I think the underlying message is true, which is we must build refinery capacity and capability inside of our own country.
So, and you are obviously you're a venture capitalist. We've talked to you a lot in connection with Mark Douglas and Mountain. But you worked a lot on AI and in the technology sector. That's kind of your wheelhouse. Do you think we need the U.S. to have either a sovereign wealth fund or its own venture capital fund or a utility play of some sort in order to support the national security of our infrastructure?
Absolutely, Matt. I think, when you think about the alternative of what happens with the pressures associated with Taiwan, the global political pressures associated with Taiwan, the alternative is much worse than us having a national refining and fab capacity.
And I'm taking a look at a recent post that you made on LinkedIn about this potential Intel investment by the U.S. government. You said that this will depend on how President Trump is as an investor. You also make the point that the company, it does have the technology to become a TSMC substitute, or at least the backup to TSMC. You also write about the potential that the government might be able to motivate NVIDIA and AMD to commit meaningful volume to Intel when it comes to fab and packaging. With all this in mind, Joe, do you follow the U.S. government into Intel? Is Intel a viable investment from where you're sitting?
Great question, Katie. Good morning. I think that, first of all, I think Intel is an interesting play for the government to support. As you look across the landscape from recent earnings, obviously NVIDIA crushed earnings, and TSMC did, AMD, Broadcom, and Intel missed. And Intel announced layoffs coupled with their miss. So I think the business is too big to fail and needs the government support. And one of the things the government can do to support it is motivate them to move into more of a third-party refining business model, a la TSMC, coupled with bringing capacity and demand from AMD and NVIDIA. So yes, I think that's the right play for the government to take. From a public market investor standpoint, Katie, it's not my forte, so I'll defer to the long onlys and the hedge funds out there. But I think from a government standpoint, it is the right play from a national security point of view.
Fair enough, fair enough. I am curious what you think about the potential timeline here. Again, going back to your post and what you're saying, it sounds like Intel rather, has all the correct ingredients here. Now it, of course, has some government backing as well. But this isn't like turning a light switch, Joe. How long do you think that it might take for some of these factors to really come together?
Okay, some interesting things are afoot. So TSMC, as part of their earnings, announced 15 new fabs distributed globally, and they intend to begin packaging in their Arizona facility at some point in the future. But today, all the packaging occurs in Taiwan. So that is a critical supply chain element that's at a geopolitical risk today. So if you're the government and you're Intel, this is a decade-long journey to convert the Intel business model to a third-party refining capability, as well as building the supply chain, the domestic supply chain around them. So this is not a 12 or 24-month transition. This is a decade-long project. But I think, again, from a national security standpoint, it is one well worth taking.
Dude, while we have you, I want to get to NVIDIA. I think you said they crushed it. I don't know if the market shares that view. What's your take on what happened yesterday with the numbers and what the outlook signifies?
Matt, I think the street is missing the concern over the data center revenue. If you look at what is happening in their data center revenue business, it is not a demand problem. It is a supply problem. Their Blackwell chips are sold out well into next year. TSMC capacity is sold out into next year. So the challenge is not how do they generate demand and get orders. The challenge that they face is how do they make chips fast enough to fulfill these orders. So the fact that NVIDIA was able to come in line with revenue forecasts despite the bottlenecks in supply chain, I think is really compelling. You couple that with, for instance, the earnings report that came out of CoreWeave and seeing them continue to grow at 200% year over year with EBITDA margins north of 60%. I'm have the luxury of investing in a company called Lambda Labs, and their performance. I agree with Dan Ives. Like, we're in the very first innings here.
What do you think, Joe? And I ask you as someone who has the perspective of starting businesses, working in this sector. You know how long and how much investment it takes to get something off the ground. But if China doesn't want its companies buying any more NVIDIA chips, can they just steal the IP and make something on the level of Blackwell, or is it far too technically challenging to get there?
It's far too technically challenging in the short run, Matt. And I think what's happening is the Huawei chip in some respects is comparable to the H20. You know, it has much more powerful compute, but is a much bigger form factor. So there's some trades there. But in a export-ready version of the Blackwell chip, it is leaps and bounds ahead of the domestic Chinese alternatives. And then if you think about what is in the future with the Rubin chipset, coupled with TSMC's migration to the 2 nm production capability, the gap is extending.